In this presentation, we will continue on with our comprehensive problem. We will now be generating the income statement from the adjusted trial balance. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Last time we took a look at the balance sheet, which is a little bit out of order than many textbooks would recommend. However, our justification for doing that is that we can go from top to bottom. We can just go right from the assets to the liabilities and the equity. We don't really need to calculate the income statement to figure out what equity is if the financial statements are, or the adjusted trial balance is properly formatted. Very easy to do. All we have to do is highlight the numbers to get what total equity is. And therefore, this really gives us a check figure that we can then fit the rest of the pieces into. This is the big picture. Now we're going to do the income statement, which is really just finding a home for these numbers, which is a component, a piece of this total equity section here. So now we're just going to find these numbers here, and that'll add up to net income, which we already have calculated on the trial balance. So to do this, we're just gonna start with the income statement. Remember that the income statement has to say something of a range of time. It's got to say for the month ended, unlike the balance sheet, which says just as of a point in time. That's on just about every type of test question, and students start to get good at picking that up on a test. You'll be able to pick that up after a while, but still not really understand what that means. And so just think about that. Obviously, the balance sheet means that we have these amounts as of the end of the month. It doesn't matter if this meant for the year ended, or the month ended, or the week ended, or the day ended. It'd be the same because it's as of a point in time. It's as of this point in time. And the income statement is really trying to say performance. How did we do? And the only way you know how we did in terms of a performance statement is to have a range of time, a beginning and an end. This, of course, beginning January 1st and ending January 31st. That's why these accounts, all temporary accounts. They're all accounts that will close out. They, are going to be a part of the closing process. Okay, so we're going to start with the revenue or income. That'll be our first account on the income statement. We're just going to start up top, and I'm going to say equals and just point to that revenue or income. I'm going to pull this out into the outer column, not because it's a debit or credit. Remember that these don't represent debits or credits. These are just subcategories. Now, we don't need a subcategory for income because there's only one account that's income, which is often the case. We might have one or a couple accounts that are income type accounts because we only do one or two things to generate income, as opposed to all the things that we do in order to facilitate the business, which is to pay for all these other expenses. So we don't need a subcategory, and therefore we're going to put it right out into the column where we usually sum things up. Now this is a credit. We don't want credits over here. That's the point. We don't want debits and credits, so I need to flip the sign. So in order to do that, instead of saying equals, we will say negative of that number and enter. Okay, so now we're going to pick up all of the expenses. So these are all expenses, and they all basically are going to be doing the same thing. They all go the same way. And so I'm just going to put a subcategory, and I copied this over here. You can type this in. This is going to be expenses, colon. Same idea. This is going to mean that there's going to be multiple expenses. Unlike revenue, we only had one account. And therefore, we're going to say, hey, there's going to be a subcategory. We're going to pull these into the inside, and then we're going to subtotal them in the outside. So then here, we're just going to say equals and point to the wages, equals and point to the utilities, equals and point to the supplies, equals and point to the depreciation, equals and point to the insurance, equals and point to the telephone. Now I'm going to do that one more time. I'm going to delete these, and just to note that we could autofill it down. So I'm just going to delete those. Once we do the first one, we could just use the autofill function and bring that on down, and it'll do the same thing. Now at this point you might be asking, well, is there some format it should be in? We're just using the same format here. In practice, a lot of times we'll have more accounts on the trial balance than we want on the income statement, and they may be in different order. So for example, we might have wages by region. We might say this is east-west region of wages. And we may only want one region on the income statement. We may not want as much detail, in other words, on the income statement. So we might combine accounts on the income statement just depending on how we want to see it. We might put the income statement in terms of the highest accounts first, which is oftentimes the wages. Supplies are awfully high here, but there's no necessarily order that we have to do that. That would be a matter of preference. So it could very well be the case, in other words, that we don't use the exact same order from the trial balance to the income statement, and that we could combine accounts depending on the format of our trial balance and our income statement. Now we'll just pull over the numbers. We're going to put them in the inside and then sum them up in the outside. So in cell H22, we're going to say equals, point to that 6,500. And I'll do this just one by one, and then we'll go back and do the autofill just to show the autofill. So utilities, I'm just going to say equals and point to the utilities and enter. And then we're going to say supplies, we'll just point to the supplies and enter. Depreciation, we will just say equals and point to the depreciation and enter. Insurance equals, point to the insurance and enter. And telephone equals, point to the telephone and enter. Now clearly these are all in order again, so we could do that a lot more quickly. I'm going to delete these and just show you that we can do this more quickly by saying this number and just autofill that down. Autofill. Auto drives it down, Dr. Phil does the calculations, and there we have it. So there is that. Now we're just going to sum this up in the outer column. I'm going to go to the Home tab, Font, underline it, and then we will have the total expenses in the outer column. You can type this in there. I'm going to paste it so it's a little bit faster for you. And then we'll just add these up. The 6,005 plus the 1,003 plus the 11,000 plus the 1,000 plus the 1,000 plus the 1,100. We will use the sum function to do that in the outer column. So in I-28 we will say equals SUM, double click that sum function and highlight 6,005 plus 1,003 plus 11,000 plus 1,000 plus 1,000 plus 1,100 adds up to 21,900. We can double check that by just highlighting these and say, is that what we found there? It is. So this looks right. This looks right. Debits and credits, are okay because we converted it to plus and minus. I'm going to say we found a home for all these. So that's good. And now we're just going to subtract it out, and that's called net income. So net income. And note what we don't do here. We don't say net income negative. We don't say negative number here to show it's a subtraction problem, but we just assume that our reader is familiar enough with income statements to know that net income is calculated as this number revenue minus this number expenses. Notice we're only going to be doing something with one column at a time again, this only being the outer column. We're not going to be jumping from here back into this column and then back over here when doing calculations on the financials, just one column at a time. So we're just going to say this equals the 29,000 minus the 21,900 or 7,100, matching our number here. So this looks like it all ties out. We don't see it tying out to this number yet until we pick up the statement of stockholders' equity. That then will bring into the picture the final few numbers we need to recalculate this 105,600. That's what we'll do next time. For more accounting information and accounting courses, visit our website at accountinginstruction.info.